Hello, everybody. Today is Tuesday. It is after the close, and we are going to talk about Tesla. And I have my friend, Mr. Last Bear Standing. He's the Last Bear Standing on Twitter. He's got a Doomberg vibe here going, someone anonymous. How are you doing?
I'm doing well. How are you doing?
I'm doing great. I'm super happy that you're here to guide us through some of the crazy things involving Elon Musk's loan to take over Twitter. And you and I were just talking and trying to figure this out because, as you can see on the screen here, Tesla was down 12% today. The overall market was quite weak, with the Nasdaq down just under 4%. I mean, tech overall just got crushed today. The S&P was down a little bit closer to 2%. And so the question really is, as we look at the one-day movement here on Tesla, what was the catalyst? And from an options perspective, if we just flip over to that, you can see that in purple here is the options deltas traded in real time. This move basically into 11 o'clock was a down 9% move. So basically from 11 to the close, we had only another 2% down day. And again, the overall market was really weak. Really, when I look at Tesla, this was the heaviest negative delta flow. So if we scroll down here a little bit, we can see the Tesla flow for today. The fact that this little red dot, which is today's total delta flow, is all the way to the left. That tells us that it was the largest negative delta flow in the last 30 days. It was a big mix of call selling and put buying. And a lot of that flow is concentrated in the 429 expiration and then next week's expiration. So again, we want to focus on this deal, but just trying to set the stage for exactly what happened today, what the catalyst was. Certainly options flow pressured this stock lower. You can see here that the deltas trade pretty sharply down to 11, and then the flow turns a little bit more neutral. It's still very negative, but it's less negative. So you can see the stock kind of trades a little sideways after that. But again, this is a 12% down day. My friend Danny Kirsch posted this histogram here of returns. This is a major tail move, obviously down 12%. This is an extremely volatile day in Tesla. And so what that brings us to is what you can see here on the Last Bear Standings Twitter page. And if we scroll down a little bit, this got a lot of attention, and it is this bit in here. Essentially, the on the SEC website, the terms were announced for Elon Musk's loan to acquire Twitter. And this is where the Last Bear Standing is really going to help us out, because we're trying to understand, was that part of the reason, was the announcement of this, that is the loan, is that part of the reason for the weakness in Tesla? And is that going to lead to further weakness? And specifically, what are the price levels that we should look for? And so to kind of guide us through here, we're going to flip over to this spreadsheet we put together. Now, if you're going to want to download this spreadsheet, or if you want to link to the spreadsheet, look in the comments section below. But Last Bear, let's walk
Yeah,
through the exactly what it is we're talking about here, and what it is we're trying to zero in on.
yeah, absolutely. Just to kind of lay the groundwork for people. Obviously, everyone has been talking about the Twitter Elon Musk takeover for the past two or 3 weeks since that initial 13D filing at the beginning of April. And I think that a lot of people were skeptical about how serious Musk was, and whether he would actually be able to put together the financing required to do a cash tender offer, something that really forced the board to accept his proposal, or something close to it. But obviously, over the past couple of days, that has gone from skepticism to a signed deal here that was announced on Monday, and so now it is very much going forward, at least as we can tell. And what that means is that it needs to get financed, and Elon Musk needs to finance it. So here I have the sources and uses, and I would say that there's three categories of financing for the transaction. The first is debt that's going to go, that is backed by Twitter itself. So basically, this is the maximum amount of leverage that banks would be willing to give to the company itself to help finance the transaction. Consider it like a LBO style debt. And then there's a huge equity component that Elon Musk has to finance. And the way that it's being proposed as being financed is through a $21 billion equity commitment from Musk, as well as a $12.5 billion margin loan, which is effectively collateralized by Tesla shares that Musk owns. And so The concern, as people are thinking about this Twitter transaction that now seems like it's likely to happen subject to a shareholder vote, is whether Musk needs to sell Tesla shares in order to finance this. And so I think that there's a lot of speculation around what the level of what levels would be required whereby Musk would be able to finance it on his own, and whether there was potential for margin calls to happen in the
Right.
future to the extent that Tesla declined relative to the margin loan.
Yeah. So let's flip back because there was a lot of attention being paid to someone who pushed out a price target of 570 for this margin loan, and the issue with that 570 number is that the math is sort of right, but it's based on the closing price of Tesla last night, and obviously the price that matters is when the deal closes, right? You want to know what the price of Tesla shares are at that time. And so, again, looking at this chart, as you can see, Tesla closed last night at 1,000, and we're now down at 876. So when we plug 875 into this model, we can walk through this a little bit. So $12.5 billion is the loan, as we mentioned, right? So why don't you walk us through some of these other terms on here and explain sort of the basics before we get into the addendum, sort of, or asterisk, I guess, that we got to put on this.
Yeah, absolutely. So basically, the margin loan can be up to $12.5 billion, and the way that it works is that he can borrow effectively 20 cents for every dollars worth of share that he has. So that's the 20% initial LTV. So he needs to have $62.5 billion worth of Tesla shares as of the time of closing, and give that to a collateral agent in order to take out a $12.5 billion loan.
Yeah. So in this case, then, if 875, so if the deal closed today and we used 875, that would be roughly 71.5 million shares.
Right.
Yeah. So where this becomes an issue is if we get down to an LTV margin of 35%, and that's essentially the value would be $35 billion. And so at what price in stock would that lead to a margin call for Elon? And that turns out that it's right around the $500 mark based on this model. And again, there's an addendum to this, but basically with this model, you can play some of the prices on this sheet if you want to download it. But basically, if we hit the $500 area, that's where this sort of margin call may initiate. I mean, there's a bunch of, again, factors to this, so we want to say that this is just a very base first start model, but that leads us to sort of the second part, and that has to do with essentially how many shares Elon owns and some of the rules and regulations, I guess, that Tesla has around his holdings.
Yeah, that's right. So I think so if you look at the top right here, the number of common shares that Elon holds at the moment is close to 173 million shares. However, for at least the latest information that we can find shows that he has 88 million, which is about half of them already pledged at this point in time, which would only leave 84.3 million shares left unpledged, which obviously is a little bit less than half of his total ownership. And I think if you think about that based on the 875 closing share price today for Tesla, I think that's about $80 million or $80 billion or so. So if you think about this 62.5 billion of collateral that he needs to be able to access that the 2.5 or $12.5 billion margin loan, there isn't necessarily a huge amount of a buffer to that number, especially given the price move today. And so that also could imply that he needs to continue to sell more shares where he would be able to access the full sort of dollar value as opposed to getting 20 cents on the dollar through a margin loan.
Yeah. And so the where it gets tricky is the current value, is you got 84 million shares, and obviously the 71 million shares that would need to be pledged for the Twitter loan, that's based on an 875 price. So if we gap down to 750, right, in that neighborhood, that means he has to pledge more shares, right? Because he needs to raise more capital. So, he can't arguably raise then over this 84, 85 million shares, right? There's that point at which you go, look, we just don't have enough shares to put up.
Yeah, exactly. So, and it's unclear. I think nobody knows actually what Elon's financial position is from other investments, or how much liquidity he has on hand, how much he would have to actually fund. But what you do see pretty clearly, at least based on the disclosed numbers today, is that just to fill out the margin loan here that he's talking about, is talking about most of his unpledged shares. And so as you have more price pressure on the stock in between now and closing, or I guess if you do, then that it limits his ability to take out that full margin loan, which could require effectively him to sell more shares as opposed to borrow against them.
Right. And then there's this point, and we were kind of chatting about this before, where, he obviously has a whole bunch of options. He's got a lot of friends that have a lot of money. And so this could just mean that, look, rather than trying to finance that extra bit by himself, he's got to call, one of his billionaire buddies to put up some of the money, or bring in some more, another private equity or family office or whatever it may be. Right. So it's not that the deal would fall apart there, just that it complicates things because you got to find another source of funding.
Yeah. And that's, and I would add that that there's the 12.5 billion margin loan that's funding about a quarter of the total acquisition price. There's also the $21 billion that he's just sort of agreeing that he's going to come up with, whether by himself or with other investors. So to the extent that that's getting funded from shares, that he hasn't sold yet as well, that's potential for more selling that would have to have, or more value that needs to come out of that same collateral. But again, it's really without insight into his actual financial position. It is a lot of speculation.
And that's certainly what we are doing is speculating. I mean, I think the deal terms that are in this sheet here, these are off of the SEC filing that the last bear pulled. So this is all pretty clear, but this is just one little piece of a much bigger puzzle. And again, kind of what we're sort of trying to figure out here is what exactly led to this 12% down day. I mean, that is a very large down day. And if we look at the options position, there's a lot of short dated flow. That's not the kind of flow that would really drop this thing, 10 or 12%. And so I guess what our question sort of was, and there's no way to answer this, and it gets into all sorts of kind of fun speculation, coffee talk sort of stuff, is if you sort of know that if you push the stock price lower, it complicates the deal. If you push Tesla stock price lower, it really starts to complicate this deal. You could generate all sorts of fun conspiracies, I guess, to talk about around that concept. But that is the bottom line. If the stock goes lower, it starts to complicate the Twitter takeover. Is that how you view it as well?
Yeah, I think it complicates his ability to finance it, and it definitely puts more. I mean, effectively, what he's doing is leveraging his Tesla shares in order to make a cash offer for Twitter. And so, to the extent that his Tesla shares decline in value, that puts more and more pressure on his ability to finance, and could potentially lead to a little bit of a feedback loop as well. So, and it is, he could also walk away from the deal for $1 billion break fee, which obviously is a lot of money, but potentially isn't out here if things really blew up in between now and close.
Yeah, and the other thing that's interesting, so around 750 was just a number, that was spitballed, that's where that we think that the shares may really start to become the share price where the deal gets really complicated, which is still another good, what is that, 10% down from here, right? So the other thing that's interesting around the 750 area is you can see that's where the stock has bottomed kind of twice, from which, if you're going to use some sort of technical analysis on this, it's an interesting position around that 750 level. The other thing is we were looking at the open interest gamma position. So if you're going to talk about squeezing the stock lower, the current gamma, which is on your screen here, this is put gamma in orange and call gamma in blue. The curve here, this is the hedging flow, seems to flatten out under 800 and into that sort of 750 area again. So volatility exists in a large fashion down through 800, but then it kind of tails off, which is just kind of interesting because you get these kind of converging events of, again, this has sort of been the low in mid-March, and then obviously this is sort of where the deal maybe gets a little more complicated around that 750 figure. So the question is there something exogenous obviously pushing down on shares of Tesla? Is it just maybe sentiment has weakened because the Twitter thing complicates, I think a lot of people's just view on what's happening with Tesla in general. And so, we'll be watching obviously pretty closely here, but is there anything at this point that you want to add on top of that?
No, I think that's probably good. And I was going to add the point that you just raised, that perhaps if it is actually folks concerned about fundamentals or the trajectory of Tesla, maybe the fact that his attention seems to be moving somewhere else is a negative. But
Yeah.
I'll let the listeners decide if that's a driving factor.
Yeah, I mean, at a minimum, it seems to complicate the scenario quite a bit, and obviously there's a lot of interesting and fun speculation out there too as to the different ways that this could all play out. My joking around sort of assessment was that if he gets the if shares of Tesla drop, he can cancel the Twitter deal and then just use that loan to buy back Twitter shares, and that would probably raise the stock price by about 50% and make him several more billions. So I don't know if any of that would actually play out, but it was mine. That was my
Yeah, well,
prediction.
I'm sure he's got something up his sleeve in any situation. So
That's funny. So we're going to leave it there. We're going to keep it short and sweet. All credit on this analysis goes to Last Bear Standing. You see his Twitter page here. It is a fantastic follow. I follow it to help navigate some of these really intense credit market issues. If you have any questions, you can also put them in the comment section here below, or reach us at SpotGamma on Twitter. Last Bear, thank you for your time, man, and maybe we'll follow up on this as the saga continues.
yeah, thanks for having me on.